Hey everyone, welcome to the weekly review. Lots to talk about today, and we had JPOD on Friday with the dovish pivot. The market liked it. We got a 90 UVol out of it, 92 I think, a 92, which is short-term bullish, but I still think we will top out very soon. And let's look at the signs of when this topping out will happen and at what level. First of all, we have this trend line that has been respected since the trend emerged. We have multiple touch points here, 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 and so on. We had a bit of a poke above when the trend initially formed, but that's fine and it can happen again in the future. Based on this, we should be topping out something like 575-ish. I expect the top to happen in the next 2 weeks. Maybe like 580 if it it does an overshoot. And basically the topping window is starting on the 29th until the 6th. I think we will have a top out in this window sometime. Uh, and there are multiple ways for it to play out, but let's look at some other stuff. We have central bank dark energy tracer, which is central bank liquidity. And in general, this market follows the liquidity model, but when it doesn't, we have a correction coming. Like for example, it took a while for things to play out. Like for example, here we had a period of divergence, but when the correction came, it was a doozy. This was 25%, no, 20%. Uh, and we've been diverging for a while. This has been going down. Got another rejection here. The market keeps going up. This is while the market was going up to new highs, this was going down, and we should be seeing the market correct relatively soon. Then we have the breadth indicators. First, this one, and what the thing to see here is the divergence, meaning we got back to the highs on worst breadth, which is a warning sign, not necessarily that you should do anything about it. Then we have this one, which went into the red zone, and we should be seeing a bit of a stall here like this. Uh, what I think will happen is we have a small correction, this goes a bit lower, and then we go higher in price, but this one will go lower, won't make a new high. But anyway, you can see that when we get into the red zone, things usually tend to correct. A similar setup to today is this one from 2020 in September, October. Went down, corrected, and got into the red zone, and then did a low retest later. And now we have something similar. We corrected, went into the red zone, and we should be doing a double test of the bottom at minimum. Yeah, so let's look at the liquidator as well. We are back above the highs from pre-COVID, um, but lower highs while prices equal high for now. And I think assuming we go to the top, we have about $20 upside relative to Friday's close, which put us above 580. I don't think we get that high anyway because we don't have to top out by always poking the line above. We can do it without going below. We go without going all the way to the high, and so basically within the next down to $20, we should see a top out. Next, we have the VIX, which didn't even do a low retest relative to this. What was strange about Friday was that VIX held up pretty firm in spite of the 90 UVol, and I think it will go lower, but it should be bottoming out around 15, not going significantly lower than this. It's building a new base. This is obviously a higher low relative to this, and maybe just let's draw a trend line. So it should respect this trend line here and not go lower than 15 in general. I think this is something we will be hitting after the VIX spike. We go back up as the market corrects, and then when things calm down and we start a new uptrend, we will be going all the way here at 10 for VIX. Okay, then we have DXY and USD JPY. So obviously the dollar broke down on the JPOW reaction. We are at 100.65. I think it can go poke a bit below 1, but it seems quite implausible that it breaks down here, even though that would be healthy for the market. Like if we correlate this to SPX, uh, the market does poorly when the dollar spikes. Like for example, here the dollar top was at the market lows, dollar top was at the market lows, and so on. This is visible throughout history. Like 2008 was the same, or it wasn't. This is DXY. Oh yeah, no, this is at the highs. So market bottoms at the dollar highs as well. So if the dollar breaks down, it's a sign that things are not breaking apart. If the dollar spikes up, the the market is it's a sign that we are close to the correction, because I expect the dollar to start to bounce here and go up before the market starts its correction. But we are very close to the one level when the poke up below 100 and on the XI, and then we should see a bounce here. And the interesting thing is its correlation to USD JPY. We had a carry trade blow off to give us the correction here. And how this will work is, let's say you are in the carry trade and you want to do risk management. There are a couple of levels of interest here which will trigger um, risk management responses from traders. First one is this level here, like regular 144, 174, because this is as low as we went on a closing basis. And if we close on a daily below this level, which we might do today, then it's a warning for people who are in the carry trade that things might get iffy. Then if we break below this level, 144.69, which is the low we had on the daily basis, again, this will trigger risk management and for people because we make new lows, and it means a new leg down has started, and there will be some more liquidation potentially or willing liquidations in which they get out of the trade, and this can give us a leg down. So this in theory is the dollar going lower, because this is JPY increasing in value versus the dollar. If this can happen without some sort of carry trade response from the market, meaning fear and so on and so on, more liquidations, and market stays at highs, this is very bullish because let's say the yen goes all the way here. If this does not cause a panic in the market, then nothing bad has happened under the hood. And if nothing bad has happened under the hood, then the bull market continues and things are good. So the dollar goes up when the market corrects in general. So if this happens, meaning a new leg down in USD JPY, then there will be intervention. And intervention will be towards supporting the dollar because the yen is falling too fast, it's causing liquidations across the board. So paradoxically, maybe the US and or Japan or maybe both will intervene to weaken the yen because this is causing problems. If this were to happen, would cause problems. And if this intervention happens, then the dollar would go up. So this is what I mean. The dollar going up is a sign that things are under the surface are not good. If this sort of thing can happen without the dollar going up and without the market getting scared and dumping, then we are in a healthy, quote unquote, healthy environment, and things are okay. Then economic calendar. Economic calendar. The only interesting thing this week we have also PC, but that's a nothing burger because it's from July. It's this second revision for the GDP growth for Q2. We'll see where it lands. In theory, it should come under expectation, but that will the market will like that. So if this print comes in below expectation, it will reinforce the belief that the Fed will cut, and the cut will be 50 basis points. So a bad print is bullish. The market will like it. This is on Thursday. A good print the market would not like because it increases the chance that we get just 25 basis points and nothing more than that. So good is bad and bad is good from the market's perspective. And finally, the biggest event of the week is Nvidia earnings. 28 after hours. Uh, we sort of got that this fake breakout here, but it didn't have any follow through. Now we have a range. Uh, I would expect that we stay within it, but I don't know. Maybe this gets front run and we go up by default. Maybe it doesn't. Earnings should be good. I'm assuming earnings will be good, and this can give us that blow up move higher. And I don't know. Let me think about it. Let's do a Fibonacci. 154, 171. This would be the target if we actually 140 first, so for retest of the high. But I'm assuming if people are bullish on Nvidia, we will get this before earnings. So we will have a run up pre-earnings, and then another potential leg here and rejection, and another potential leg here and rejection. We shall see. Um, yeah, let's go back to SPY and draw some stuff. We're back on the 30 minutes. This pretty much aligns. This is Tuesday, 580. This was a ghost print from at some point in the past. I don't remember the date exactly, and I think we will hit it, but not now. Six, five. This is for me to figure out market hours and non-market hours. So we are here. This is pre-market. Market opens here. I think we can do like a small pullback here and basically Friday's candle. What happens in a bull phase is attempts to move lower happen, but they always get bought out. And we should be retesting Friday's candle. Second, 560, yeah, something like that. This level here, which was also support on Friday, but it seems plausible that we will do so again. So we are in chop mode pre-market, and that probably won't change. But I wouldn't be surprised to see something like this in hours. Quick drop, then we go back up and we go higher. Uh, Today shouldn't have that much energy, so just a dip and a recovery, maybe slightly higher. Then we slowly grind up over hours. and then we move higher again, 565, then another small grind up post hours. And this is Nvidia earnings day. And I'm assuming anticipation. So we should be hitting 570 around then. And then that's the post market. And we have our binary event. What's this? This is okay. And then this is the next day. So this is a binary event. If earnings are good, we probably get our top here. And that would be a surge in the market, get to 570 by the next day, a bit higher. We top out, but we top out sideways. And we keep going up or doing some sideways consolidation before at some point here, not exactly this, I'll draw it as we get near, we should be starting the next leg down. So something like this, but this is the binary point. This is Nvidia earnings. If earnings are bad, the party can start earlier. And we will go down a lot faster than we went up. Let's go into group 5. So to make it in short, I think we get a retest, an attempt to go lower that will get bought up, uh, and it's more like an ascending pattern here, in which we have a build up towards a move a leg higher, something like this, and it would be this before another leg higher. Target would be probably like 570 by the time we get to Nvidia earnings, if not a bit higher. It can be like 468 to 472-ish, something like that, by the time we get to Nvidia earnings. Nvidia earnings is binary. I think it can get us to as high as 580, but that's the top. We did something on this on the website in which we can simulate the delta on various prices. And like for example, if I put 580.1 just to see what it would look like, you see that we have very little puts. Like there, price would be here, price would move here, and there's only 600 above, and there's very little OI above to act as a magnet to pull us higher. So I don't think we can just jump from this to towards like 600. It's difficult to fill this gap of OI here that there's no interest at all. Plus all the puts are out of the money, so delta would look like this. 580 would be definitely short. I don't even think we get this high. More likely that it's 570-ish. Let's do 575.1. And even this looks a bit iffy and suffers from the same problem as the jump from 580 towards 585 here. Nothing, no OI here, little to no OI here. So basically 575 is the expected top in my opinion. Due to momentum and I don't know, some types of squeeze, and maybe Nvidia earnings are amazing, uh, I think we can get as high as 580, but I wouldn't bet on anything above that. And again, you can see that this would be crazy over overbought levels, basically no put delta in the money, everything is in the money for calls, and so on and so on. And we can do the same for Q, which should be 500. Oops, trigger happy. 500.1. Get above this level, a large gap to fill to go higher here, and again no puts to burn. I don't think we get above. For QQQ it's 230. We would be here, just above that. And again, we run out of puts to burn, and decay will be coming in pretty aggressively as we near September OPEX. So my expectation is that we won't get above these levels by September OPEX, and we will start the correction somewhere around them. Absolute top, probably SPY 575, absolute top 580. For Q, retest of a 500. 500, yes, and for IWM to 230. And this is the scenario in which Nvidia earnings are good and we get a push up from that. Other than that, the level we are at when Nvidia earnings hit might be the top itself, because we are already overbought as it is. From a breadth perspective, from positioning perspective, we're pretty high again, like 55 positive. Um, Still some room to go up. I expect another day or two of positive breadth, which will get us to like 60 plus, which is where we had this correction as well, like 62. So yeah, I think we're getting very close to the top of this. I will show one last thing, which is this divergence, which is huge. We have equivalent high, but this is pretty obviously bearish. And the last trick I like to do is, oops, alt invert. And let's just clean everything. Would you buy the bottom on this? Let's do the inversion. Let's do the inversion for... This looks pretty sick. It looks pretty sick on the weekly as well. Like, it looks like we're close to a trend reversal. Try to go up, push down, but obvious bullish divergence. And if this fails to make new lows, quote unquote, new lows or new highs in reality, then this will reverse and probably go for a support here, like for 500 at least probably. This will be the target level, like 471, 478, if we get that 20-25% correction that we usually get when rate cuts begin. Yeah, that's it for today. Hope you guys enjoyed it. Have a good one. Bye bye.